I want to pull up one of my favorite quotes from the book now. Jim, you write, the confidence of the entire global system of finance rests on the US dollar. Confidence in the dollar rests on the solvency of the Fed's balance sheet, and that solvency rests on a thin sliver of gold. This is not a fact anyone at the Fed wants to acknowledge or discuss. Jim, are you suggesting that we are already on some sort of a gold standard? Am I interpreting that right?
You're interpreting it exactly right, Danielle. The world has never left the gold standard. We deny it, we stopped talking about it, but the world is on a shadow gold standard. I mean, ask yourself, why does the U.S. still have 8,000 tons? Well, I think I unlocked that mystery, which is they needed to support what they promised the Fed. Why does the European Central Bank have 10,000 tons? Why does the IMF have 2,000 tons? Why is China buying thousands of tons? Why has Russia more than doubled its gold reserves in the last 7 years? We clearly are on a gold standard, but of course no one wants to talk about it.
Well, you also bring up one of the greatest criticisms that I often hear, if we were to go on a gold standard, that there's not enough gold to support a gold standard. And you're saying, well, yes, correct, at the current market price, and that's why in order to have a gold standard, perhaps gold should be at 10,000 or 15,000 an ounce. But if gold were, let's say, to go to those levels, what consequences would that bring about? Is that a world we'd want to live in, basically?
Well, it would be highly inflationary, but this is exactly what happened in 1933. Gold went from $20 an ounce to $35 an ounce. That's a 75% increase. This was in the middle of the greatest period of sustained deflation in American history, 1929 to 1933, and yet the price of gold went up 75%. Well, that was dictated by the government. The government made the price go up because they were so fearful of deflation. See, nothing happens in a vacuum. If the price of gold goes up, everything else goes up, because it's not really the price of gold going up, it's the dollar going down. When gold goes up 75%, what really happened is the dollar went down 75%. And that's what they wanted. So oil, wheat, steel, corn, all these other things went up, and it worked. It could happen again under one of two circumstances. Number one, deflation gets out of control. The currency wars don't work. Currency wars, forward guidance, QE, Operation Twist, all these things don't work. Deflation still rules, in which case governments could raise the price of gold to get inflation. The other scenario is the system just collapses, as it did in 1971 or 1914, in which case you go back to gold to restore confidence. But then this gets to the price issue, Danielle. Gold at $1,250 an ounce is extremely deflationary if you're trying to support the money supply. At $10,000, it works just fine. That's slightly inflationary. So there's always enough gold. It's just a question of price.
Let's talk about China and China gold buying. They've obviously become more transparent in revealing how much they're buying, but you suggest that they're suppressing the price on the COMEX market. Their goal is to get as much gold as the US, and once that happens, that we might see the price of gold skyrocket because China won't care about the price of gold anymore. But isn't this something that the US would want to prevent?
Well, you would think so. Maybe Donald Trump would say that. From a nationalist point of view, yes. But I've spoken to number 2 person at the IMF. I've spoken to the number 1 person in the intelligence community on economic affairs, and both of them said we're just completely relaxed. The IMF person said, China needs to diversify its reserves from what he called credit reserves to tangible reserves. I was shocked from an IMF, because when he said credit reserves, he meant treasury notes. So he's calling that credit, which is true, to hard assets. So that's interesting coming from the IMF. And this intelligence official, I said, the Chinese are buying all this gold. Aren't we concerned about it? He goes, somebody's got to own it, as if it were a yard sale. So at the highest levels of the U.S. government, or the IMF, they're very relaxed because they understand that we are on the shadow gold standard. And if China's the second largest economy in the world and doesn't have gold, that's an unstable system. You've got to get the gold to China, but you can't talk about it because the price would skyrocket. So there's this big stealth game going on. China's buying, by the way, you said they're more transparent. We call this a limited modified hangout. They're a little bit more transparent, but on the whole, they still lie about their position. So they say they raised it from 1,054 tons to about 1,700 tons, but they actually have 4,000 tons, maybe more. And we know that from Hong Kong import data and from mining output. So we have other sources of information to form that estimate. It's not a guess.
Finally, Jim, I know you've been traveling a lot for your new book. you've also had some interesting insights as to the current gold situation in the world. Have you heard about shortages or?
I have. I just recently returned from Switzerland. I met with the head of the world's largest gold refinery. He told me a couple of things very interesting. Think what a gold refinery does. Gold comes in the front door, gets processed, and goes out the back door. So he knows who all the buyers are, and he knows who the sellers are. And he said, I've got a waiting list of buyers. He sells China about 10 tons a week. He said they'd like to buy 20, but I won't sell it to them because I don't have enough gold. He's having difficulty sourcing it. He's been in the business 35 years. He said, I've never seen anything like it where I can't find the gold to refine. So physical shortages are already popping up. I don't care what the COMEX does. Eventually the shortages will catch up with the market price and it'll skyrocket.
Thanks so much, Jim. Excellent insights from you, and best of luck with your book.
Thank you, Daniela.
I urge everyone to get a copy of The New Case for Gold. Thanks so much for watching. We'll see you tomorrow.